Talk a little bit more about Intel kicking off earnings season for tech companies in a big way last night. The shares up as much as 4% after hours. Profit in the quarter nearly quadrupled compared to a year ago, as Intel says it got a lift from sales of new chips for computer servers. It's the type of purchase that companies been holding off on during the recession, so that's a pretty good sign. The company also boosting its forecast on gross margins, a key measure for technology companies.
Well, today, the first of the big banks will report its results. JP Chase may say income declined on losses from credit cards and also home loans. That's where investors are going to focus. The company is expected to post a profit of $2.9 billion or 64 cents a share. JP says mortgage write-downs could be as high as $2.5 billion per quarter this year. Those earnings expected around 7 o'clock this morning.
All right, it's a couple hours before that. Instant audit this morning from Doug Flynn of Flynn Zito Capital Management is here with us in studio. Good to see you, Doug.
Good to see you.
All right, Intel, the idea that companies are starting to spend again must be a pretty good sign. Encouraged by to see a figure like that this morning?
Yeah, that was one of the major reasons why the profit surged. I think that firms had held back on a lot of spending. That was one of the key areas that they did. And in fact, the whole technology sector in the first quarter really lagged the market. So that's a good sign for them, no doubt. They're in a really strong position, probably the most competitive one in the industry.
Do you think financials still are the leader here as far as this earnings season on whether or not investors are confident in the corporate numbers we're going to be getting?
Well, financials actually outperformed in the first quarter and may have gotten a little bit ahead of themselves, although we do like some of the numbers that we see for the short term. I think with financials, because they're somewhat more interest rate sensitive, you have to worry more in the latter part of the year than you do right now. So you have a little bit.
Is that because of expecting the Fed decision or the rate raise sometime in November?
I think so. After you get through all of the earnings season in the summer and all of that, you have to worry about once things get back to a little bit more normal in terms of the current pricing, then you worry about the interest rates rising and what that does to the financial market.
So it sounds like you're thinking about some asset allocation changes as we move into this earnings season, and also seasonal changes that people should be thinking about in their portfolios. Is that what you're getting at?
I think so. I think that, we've lived in the lower quality stock rally since the low of the market, and it really still hasn't turned around to the higher quality stocks yet. And those two stocks that are posting earnings today are definitely on the higher quality side. So you should see more on that side than you have seen from some of the lower quality stocks.
All right, fair enough. We'll see how JP Morgan does this morning. Thank you, Doug. We'll be back to you a little bit later on in the hour. Now, we were talking about